Are you a Web3 startup considering a token generation event? If so, this video is for you. It is crucial to plan well in advance of a token generation event for both tax and accounting purposes if you want this to be successful over the long term and actually benefit financially from this token and not blunder it with tax mistakes or completely mess up your accounting records by not tracking this appropriately. So I want to go over at a high level some tips and some best practices regarding the considerations around doing a token generation event. So what is a token generation event? It's basically a project when a Web3 project issues a native token on the blockchain and it makes it publicly available to market participants. So as you can imagine, there are several considerations to this, and I want to get right into them. So number one is going to be the legal entity structure and tax jurisdictions that you are both operating out of and doing your token generation event from. Now, you could be doing that all out of one entity, although that's very uncommon. I usually see several entities that are established for this purposes. Most commonly, we're going to see one operating entity within the US, usually Delaware, and then we're going to see a token issuing entity, usually outside of the US, in places like the British Virgin Islands, possibly with a Panama Foundation. And there's many other structures that this can take. In order to even make a decision on that, in addition to working with your tax team, you should work with your legal team as well to make sure that you're taking into account all of the legal considerations. But you should have your tax team and your accounting team and your CPAs at the table for these discussions, because the tax and accounting considerations to this are also vital. So really, one of the first considerations for both what your accounting requirements are going to be and what your tax requirements are going to be is what is your legal entity structure and what jurisdiction are you launching the token event from and where are you operating from. Obviously, that is going to impact to a large degree how this is going to be taxed. Now, when you launch a utility token, generally speaking, it can be looked at in a few different ways. It could be looked at as revenue or deferred revenue, depending on the underlying nature of the token and the utility that it's providing. What's less common is that these tokens could also be issued as debt or equity. And in that case, they would be treated as such. But what we're most commonly seeing are tokens that are getting treated as either revenue or deferred revenue. And it's going to be based off of what utility is the token delivering and the timing of that utility. So those are the first few considerations. Now, in most of these examples, when you're going to see the token generation event, let's take the example of a BVI entity and a Delaware operating company. The BVI entity is going to issue the token, and then usually with some form of a service agreement or an IP agreement, they're going to then grant those tokens, or they're going to pay those tokens to the Delaware entity. Now, those tokens, when they're transferred from one entity to another, there's many considerations there from a tax perspective, and this is extremely important because this is going to impact your tax liability to a large degree. When these tokens are being transferred, number one, we need to make sure that it's at an arm's length agreement, and we need to make sure that we're documenting that appropriately from a transfer pricing perspective. Number two is that you need to get a valuation on these tokens. And this goes into part of the transfer pricing considerations, is that we're going to need to value these tokens at the date of transfer. We need that for tax purposes as well as accounting purposes to even just accurately represent the value of these tokens on the respective entities' balance sheets. So, one of the first considerations is going to be, how do you structure the tokens getting from the issuing entity to the operating entity? And in many cases, these can be taxable events if it's going to be in exchange for services or in exchange for IP or some form of that. And you're going to have to also, like I said, work with a valuation specialist to place a value on those tokens given your facts and circumstances in order to decide how, what is the taxability of each token going to be. So that is one of the most important things, is first understanding the agreements between the companies that are both operating and issuing the token, and understanding what tax regimes that they're operating under when you're dealing with multiple entities in several different jurisdictions. Now, one issue that you may run into is that with the international entities, depending on the service level agreements, there may be some profiting that they have from some of the tokens, and depending on how your full structure is set up, without getting into too much detail, some of that exposure could potentially flow into U.S. taxpayers if they're directly owning these international companies. So when you're planning your ownership of these international companies, you need to take into consideration how this can impact the taxes within that company's jurisdiction, but also to the degree that those companies are owned by U.S. persons, there can still be U.S. tax consequences, even if these transactions are happening in an entity like a BVI entity. So overall, from a tax perspective, I would say it's jurisdiction and token dependent, and it's key to get a valuation and to have the right transfer pricing documentation when you're moving these tokens. Another very important consideration for anyone doing a TGE event is at the founder and employee level, because that's who a portion of these tokens are going to be granted to. They're going to be granted to employees, to founders, to advisors, and usually there's going to be some lockup period. Depending on the type of token allocation, this is going to be another factor that we actually need to consider. Are we going to be doing RTAs? Are we going to be doing RTUs, or some other form of a token allocation to the founders and to the employees? To the degree, depending on the type of token agreement that you reach, if you're going to grant these tokens upfront to your employees with a lockup period, they have the potential to pursue an 83B election. And I don't want to really hamper this video with going down the weeds of an 83B election, but this needs to be an important consideration for the company to relay to their employees and founders and anyone they're giving tokens to, that they need to sit down with their personal tax advisor to determine if an 83B election makes sense for them. In many cases, it will, if they have the funds to cover the upfront tax consequences to an 83B election, because they'll have to pay the taxes upfront on the value of the tokens they receive. But the benefit to that is that when the tokens vest in the future, they only have to pay capital gains when they sell them, versus if they don't make an 83B, they're going to have to pay income on the full amount when they receive the tokens during the lockup period. And if the company is going to be successful, it's usually they're going to be receiving them at that vesting period at a higher price. So the 83B is a big tax planning opportunity, but there's a lot of nuance to it. So you need to deal with that on a case-by-case basis and make sure that you're planning appropriately at the individual level. So a few, final thoughts on this token generation event and some of the considerations. Record keeping is key, both just making sure that you have a good accounting system set up before your TGE event, and then during and after your TGE event, when you're actually releasing tokens and you're moving tokens between companies. All of this record keeping needs to be completely systematized and above board for both accounting purposes and tax purposes and decision-making purposes. Additionally, you should be working with CPAs that are experienced working with Web3 startups doing TGE events, as well as working with lawyers that are experienced with TGE events. You need to have, both of these people on your team. And in addition to that, you should have valuation specialists and transfer pricing specialists on your team as well. This is going to ensure that you're considering your legal liabilities, we're able to comply with IRS tax requirements, and we're considering all of our tax planning considerations related to the TGE event. Lastly, future regulatory developments. We're operating in a rapidly evolving regulatory landscape here in Web3, and this can have a potential impact on how TGE events are taxed and also how they're even looked at from a legal perspective. So we always want to stay up to date on that. And a big key with that is just making sure that you bring the right advisors on your team who are in the weeds dealing with this every day. So if you're considering launching a TGE, this is a very big opportunity for your company, but it requires methodical planning upfront to make sure that you get this right, because you really only have one chance at it. So if you're planning a TGE event and you're looking to work with an experienced CPE firm that deals with these matters, contact me and my team today at camusocpa.com. I'd be happy to sit down and discuss your company, your future plans, what you're planning for the TGE, and how exactly we can assist you from a tax and accounting perspective. So contact me and my team today at camusocpa.com.